How to trade support and resistance in Forex. Now I know that this topic has been talked about and taught over and over, but this is my approach. This is how I do it, and I think there's no better way. So first, you want to establish if the market that you're trading is in a trend or a trading range. So the first question will be, what is basically a trading range? You want to establish what is a trading range, right? And a trading range has at least a minimum of two highs, like we have one here and one here, and you need to have equal highs and two equal lows. So we have one here, in this example. This is euro dollar hourly chart. I also have some extra support, which is the daily level over here. So that was also an added thing. That's that red line over here. Now it did not really touch it, but that's where it consolidated over here. So it moves down, goes up, hits the moving averages, creates that swing high, comes down, fails to break. So it's a trend here, right? First it's a trend, but as soon as this fails, well, not this fails, as soon as this fails to create a new low, we are possibly going into a trading range, because now we have two lows. And then we get a second high, which is this one here, with rejection. So now what happens is that you are in a trading range, and the third touch is going to be your trade. So this is where we went long. So when you go long here, your stop loss is somewhere down here below. So somewhere that you think it's not going to get hit. So 20 pips, 25 pips. And then your target is obviously going to be the high. As I speak, this is actually arrived all the way up here. So one could have actually gone for this level to trade as well. So this is the simplest way of doing it, and you can find many, many examples. There are two things that we need to know about trading range though. There are wide or tall trading ranges, like in this over here is wide. This is a little bit tight, but not that tight. So what is a tight trading range? In a tight trading range, suppose if you were to go long here and you have your stop loss here, you can see, let me bring some boxes. So if this is the space where I took the risk, I could technically take, this is 1, I'm just copying pasting the box, and that's 2. So if I took this risk, I could take at least 1:2 winner. But in this case, I have more than 1:3 winner, and that's what we want. If the price action was over here and I could only get 1:1 or 1:1.5 as my, like for example, if this was a trading range high, that I could only take 20 pips for a 20 stop loss, then that is a very tight trading range, and you want to actually wait for that breakout. You don't want that trade. So this is the idea. If there's a trading range and you want to trade it, you want to have at least 3 to 4 hours inside it. That would be called a wide or a tall trading range.